by Riverside.
Love that. Hey, y'all, and welcome back to Behind the Books with Brandy. I am Brandy Bodine, the owner of BB Taxes Notary, and I am so glad that you're here. This podcast is for everyday taxpayers, families, and small business owners who want just plain English conversations about taxes, bookkeeping, and building a business without feeling like they need a financial degree to understand it. Before we get started, just a quick reminder that this episode is a general education only. It is not personal tax, legal, or financial advice. Your specific situation may be different. So always talk with a qualified professional about your own records and your tax return. So here we are. Today, we're going to be talking about one of the biggest messes I see as a small business owner, as well as a small business bookkeeper, mixing personal money with business money. If you've ever paid for gas, groceries, a restaurant meal, or just anything from your business card or the same account as your personal, you are not alone. A lot of people start their business that way. We're working hard, money is just moving fast, and they're simply doing what you have to do to get things done. But eventually that mixes money up and creates confusion. That confusion makes a whole mess of work, not just for me, but for you. And it also makes missing deductions and tax prep just so stressful. So instead of going, what in the world was that charge for? Let's talk about how to clean it up and make it easier going forward. When you own a small business, it's going to feel like the money's yours anyways. And in a sense, it is. You need money to manage. But for bookkeeping and tax purposes, you still need to know what money belongs to the business, what money was spent for the business, and what was personal. Your business records should show the truth about your business activity. What that means is that your income needs to be recorded, your business expenses should be supported, and personal spending should not be mixed as though it was another business deduction. IRS generally expects you, the taxpayer, to keep records that support your income and your deductions that you show on your tax return. A receipt, a bank statement, mileage log, invoice, any other document's going to help show that and support that record. The cleaner your bookkeeping is during the year, the easier it is going to be to answer questions later. And honestly, it's not really just about taxes. Clean books are going to help you decide whether or not your business is actually making money. They're going to help you know whether you can afford to hire help, buy an equipment, increase your inventory, Lord forbid, pay yourself, or take on another expense. You cannot make a good business decision if your bank account is telling one big messed up, mixed up story. So let's talk about making this real. What does mixing money really kind of look like? Well, maybe you're like me. Maybe you own a small business, customer pays you through Cash App, Square, Venmo, or even a check. That money is going to land in my personal account because that's already where I had it set up going, right? But then I use that same account to go ahead and buy my personal business supplies, my paper, pens, whatever I need, pay my phone bill because my work uses my phone a lot. But I also use it to buy groceries for the house, pay for lunch for me and my nephew whose birthday's coming up, filled up my car, and I decided that's where I was going to pay my notary subscription from. By the end of the month, I have money coming in and out of that account, but there's not a clear line between what was personal, going to lunch with my nephew, and what was business, buying paper and supplies for my company. But let's look at the other situation here. Maybe you do have a business card, okay? But maybe you tell yourself, I'm just going to borrow a couple $100s for groceries, because money's tight in my personal account. I'll put it back later, right? That's what you're telling yourself. Next thing you know, 3, 6 months later has passed. your bookkeeper's going over your books and she's like, ma'am, what is this charge for $187 for the Piggly Wiggly? You know it ain't business. I mean, come on. What you gonna do at the Piggly Wiggly for business? You know it is a personal food. But, not everybody knows that that's what Piggly Wiggly is. So making sure that you notate that charge, and you can do it inside your app. You can just put a note underneath the charge. Notate that charge. That way when your bookkeeper or tax professional is pulling your card information, it's going to notate here, this is a personal. I mean, that's going to be the easiest thing here. And I'm not here to fuss about anything to anybody. I know life happens. I know small businesses are often built from the ground up with blood, sweat, and tears of your own personal money. I get it. They are built on a whole lot of faith. But that was where you were. This is where you are now, and it's time for a reset. So let's talk about some steps to do that reset. Our first step is going to be the most obvious one. Open a separate business bank account. Now, I don't mean that you have to go out to Wells Fargo or Bank of America and open up an account. It's practical, all right? And to be honest, you probably already have one that you could use and set aside just for business, whether that's your Venmo account or whether that is your Cash App, wherever you get the money sent into you the most at, or maybe you have a Square. I don't know if you knew this, and I am not publicized by Square, but Square actually has a checking account that's attached that you don't have to open up an account because they'll send you a handy dandy little Square debit card. And bada bing, bada boom. They're already charging you. You might as well take the payday. So there's that. That will be a whole other situation we'll talk about. But making this one small change of separating your personal from your business, that is going to make a huge difference. Having your business income go into that whenever possible, or even doing a transfer into that whenever possible, if you do accidentally have some business income coming into another account. And then just pay all your bills from that one account. And there you go. You have everything beautifully, neatly wrapped up in a tight bow for your tax professional or your bookkeeper, either way. Doesn't matter. Now, that doesn't mean that you'll never have to use your personal money for your business again, especially when we're just getting started. You're going to need to put your own money into your business, and that is okay. The important part is recording it correctly. Just because you put the money into a business account to cover expense, that is not business income. And just because you went to the bank and pulled it, that isn't considered business withdrawal either. So here's the difference. When you move money over from your business account into your personal, that's going to be considered either an owner draw or an owner, it's going to be sent as like a payroll or something kind of in that dependency, depending on what your entity type is. Now, say that you're a sole proprietor, that's just going to look like an owner draw or a distribution to the owner. So be careful, because if that business that came out, but it was for a bill for the business, you don't want it to be treated as though it was for you. But likewise, just because you take it out of the business account, vice versa. So the only reason it's important to get advice that specifically is for your structure is because not everybody is created equally when it comes to bookkeeping. For everyday bookkeeping, the main point is simple. Just keep a clear trail. But for you, it may be different than, say, for BB Taxes Notary or for Blackwater Bay Baits. Your ability to move your money and how you want to use your money is definitely going to be solely based upon your own entity. However, keeping a clear trail, that's something everybody can do regardless of your entity. Second step, choosing a way to pay yourself. A lot of business owners, like I said, just take money as they need it. Again, I understand why, but it makes it harder to plan for your household and harder for you to understand what your business can truly afford. Try choosing a regular way to move money from the business to yourself. For example, decide that every Friday you're going to transfer a set amount from the business account to your personal account. Or maybe you want to do it every other Friday and you decided that you're just going to do twice a month. That exact method, again, is going to depend on your business income, your entity, how you run your taxes, and your personal needs. I can't make those decisions for you. The point is, though, making every money movement intentional. When you have a system, you're less likely to dip into the business account for personal needs that pop up. You can look at your business's balance and know exactly what is going to be needed for supplies, bills, taxes, payrolls, inventory, and finally growth. Once you have those things separated out. Again, big things separated out. So step 3, clean up what has already happened. Now, I know you're thinking, Brandy, I've already got all this stuff mixed up this year. Oh, heck no, I'm not even, and it is August. No, thank you. Just take a breath. Step back, take a beat. Start with your bank and credit card statements. Easy peasy, right? You can print them off on the computer, mark the ones that are no-goes, and highlight the ones that are go-goes. Okay, go month by month. Review every transaction. Ask yourself, was this business? Was this an expense or an income? Was this personal? Why did I transfer between accounts? Why was this money placed into the business account? Did I take this out for myself? You don't have to have all the answers in one sitting, but you do need to start somewhere. For business expenses, save proof when you can. That includes emails, receipts, invoices, payment records, statements. Save it. If you don't think it's important, there's a good chance that your tax accountant does think it's important. For your meals, travels, vehicle expenses, purchases that have both business and personal uses, be careful because that's going to be a mix up. Those categories do have special rules, and not every dollar spent is going to be automatically deductible. Most meals you can only deduct between 50 to 80%. So just kind of keep an eye on those. Ask your tax advisor if you're not sure which ones you do and do not qualify for. Okay, so for example, like we talked about, just because we're talking about business over lunch, me and my husband go out and we're like, okay, we want a $50 steak, so how are we going to deduct this? Oh, we're going to talk about the fact that our business is doing excellent this quarter and we've done so well, and we're going to add frozen squid to it. That does not mean that that is now automatically an entire meal of business deduction. And just because I drove my car to that meal does not make that a business mile. Keep your records. Now, in that thing, it actually was not, because the intent of going to dinner was not the intent of talking business. The intent was going out on a date, eating dinner with my husband. Would not have been considered a business meal. Now, with that said, if I was to take out my friend Anna, who is offering life insurance policies, and I wanted to know more about it and how I can help show my clients that, then that could be considered a 50 to 80% deduction, because I went with the clear intentions in my mind that I wanted to know more about Anna's company. I wanted to know more about how I could add that skill set to my already growing clientele. And so that would make it a business deduction. Now, again, does not necessarily mean that that is going to be 100% deduction. It's going to be anywhere between the 50 to 80%. So, all right, step 4. Stop using your business as an emergency funds for personal. It is one of the hardest habits to break when money is tight, but your business account has its own job and doesn't need your job to be on its plate too. Okay, it doesn't need to hold money for your personal needs. It needs to hold money for the business needs. It needs to help you track your income, but it also needs to help you prepare for your taxes, cover your inventory, insurance, payroll, subscriptions, anything that's unexpected, just kind of everything, right? But when your personal spending starts to come out of that account without being tracked, it's going to look like the business has more expenses than it really truly does. Or it can make you think that your business is doing worse than you actually are. But on the other hand, if you pay business expenses out of your personal account, but then never record them, you're going to miss expenses that should have been included in your bookkeeping. Either way, your books will never be telling a full story. Simple rule that can help you is if it is for the business, pay it from the business account. If it's personal, pay it from your personal account. If you have that line that you cross every once in a while, make sure to document. Don't let it disappear into the mix. Okay, so fifth step, and this is one I want to tell all my bookkeepers and all my small business owners and everybody else out there in bookkeeping land. Do not wait until January 1st. Do not wait until December 31st. Do not wait until April 15th. You do not have to wait for tax season to look at your business numbers. Pick a day, any day, every day. No, not every day. Just pick a day out of the week, a day out of the month, either one. Whatever works for you, boo. Pick a day. For me, Friday afternoon works best. For others, first day of the month works best. Find a system, put it in place, one that you're going to actually use. Remember, 30 days incorporates a habit. Do it for 30 days, you have a new habit started. But during that bookkeeping time, you're going to be reviewing your deposits, categorizing business expenses, looking for those pesky personal charges that may have slipped over into the business account. You're going to upload all your saved receipts. Remember, we talked about this a couple episodes ago, how we are going to have this beautiful handy dandy tax file home, whether it's on our computer or if it's in a filing cabinet, wherever. We're just going to go ahead and have that handy dandy tax filing home. And that's where we're going to put our receipts in. Put them in there. Put upcoming bills in there. Review unpaid invoices. Set aside your money for taxes. Make sure that you understand where every bit went. Even 30 minutes of regular bookkeeping is going to save you hours of cleanup. Here's a quick note though. If you're using QuickBooks, Xero, or any other bookkeeping software, even Excel, connect all those accounts together. Make them talk to each other. They really do. Remember though, software is helpful. AI is pain in the rear, but a person really needs to be looking over that information. Bank feeds don't know whether a Walmart purchase was printer paper or if it was for the family. You do. So we're going to do another quick example real fast. Let's just say that you own your own small business, right? That would be me. That should be you. And a customer pays you $800. It goes into your business bank account. Then you say, I'm going to buy 150 supplies. So that's like some pens, some paper, and a couple more business card packets. Great. Easy to identify as a business expense, as long as I kept my documentation, which is, again, in this day and age, the email receipt. But now I'm transferring $300 from my business account to my personal account because I forgot that the electric bill was coming out at the same time that my internet bill was coming out. So I need that $300 to help cover that bill. Guess what? Not a business expense. Although a quarter of it is a business expense, the rest of that $300 is not a business expense. Just because it simply left my business account, I'm going to have to record it properly based on my business structure, which in my case, I'm going to go in and put in a journal entry that says, I did an owner draw of $300 from my business account to my personal account for coverage of blah, blah, blah bill. And then say later on, I go and I buy $75 worth of supplies at the supply house and completely forgot my business card at home on my desk. Whoops. But guess what? Even though it's coming from my personal card, it is still considered a business expense and needs to be recorded as such. Even though I personally paid for it, I need to make sure that that is covered. But do you see how quickly that can get confusing? Because now I've got $75 on my personal account, but for my business. And then I have $300 from my business account, but for personal, that's like a $225 difference there. That if I don't write them down correctly, could either put me $225 in the hole one spot or $225 in the positive in another that should technically be in the negative. So the money may all be moving around for a good reason, but the bookkeeping needs to tell the truth about each transaction. So here is Brandy's bottom line for today. Separate out your business money and personal money as soon as possible, like ASAP. Open up that business account, use it for business income, business expense, paying yourself intentionally, picking that one time a month, twice a month, once a week, however you choose, do it intentionally. Review your transactions regularly, checking your bank statements every month. And when personal money does cross paths with business money, document it instead of guessing later. You do not have to have perfect books overnight, but you do need a system that's going to get better over time. Small steps count. One clean month is so much better than another month of confusion. One organized account is definitely better than trying to piece together a whole year at tax time. So, if this episode made you realize that your books need a little cleanup, please don't feel embarrassed. That is exactly why bookkeeping support exists. You are not the only business owner who started out using whatever account was available and didn't just try to keep up as you went. If you're in Florida or you need a virtual bookkeeping or tax support, please book an appointment with us. You can find our link in the description below. We can talk you through where you are, what records you have, what's your realistic cleanup and monthly book plan may look like for your business. And if today's episode has helped you, please follow Behind the Books with Brandy on Spotify, leaving a rating or review if the opinion is available to you, and share this episode with business owners who need a bookkeeping reset. That is one of the best ways to help podcasts reach people who need it. You can also send questions in for a future episode. I'll be answering general tax and bookkeeping questions right here on the show. Just remember, I cannot give personal tax advice over a podcast. I can help you break down common topics in plain languages, though. Thank you again for spending part of your day with me. Keep building, keep learning, and keep your records as clean as you can. Until next time, this is Behind the Books with Brandy.